Hello, everybody. Welcome back to the Trading Room. I'm Shane Vernier, and this is the U.S. Mid-Session Brief. Today, we're going to be talking strategy. We're going to be talking the pendulum strategy, and we can't do that until we show our disclaimer. So here we're out of the way. Now that we got our disclaimer out of the way, we can go ahead and get started with Mario Singh's Pendulum. Interesting trading day today. I will say that it's been all over the map. I've been watching U.S. equities really trend higher, and here's the story of the day right here. It's the S&P 500 making new fresh highs. We sort of called out this big round number of 6,000 as being a potential port of call for the S&P 500. I think that's exactly what's going to happen here. We just keep grinding higher and higher and higher and higher and higher, and there really isn't much rhyme or reason to it. I mean, today our number one market driver is going to be the FOMC minutes. We saw really a ranging market, a ranging S&P 500 for probably the past 3 weeks. And today we've seen a bit of a break, but now we're starting to retrace back into that daily range. So tricky, very tricky to trade if, in fact, you don't get perfect trade location. Bobby Bob, good to see you. But so that's what we're going to be looking at today. We're going to be talking a lot about Mario Singh's pendulum strategy, and the pendulum's designed to capitalize on markets that are in rotation. I do want to start off by saying that we are going to have a bit of some noise to contend with here. We're still getting some of the repairs done to the house, so that's going to be, if in fact those noises do get to be too much, then we'll have to kick off and do another live stream later. But for right now, I think we should be good to go, and we'll do the best we can with it. All right. So in essence, what we like to do here at How to Trade is provide a lot of strategies. And, one of the ways that we do that is we go on YouTube and we post videos on YouTube. You can see this is the How to Trade YouTube channel. We've got all sorts of strategies up here. Beat the Market Maker, 9 EMA, tick scalping, key levels. That key levels video is a pretty good video. Learn the Fibonacci Golden Zone. That's a nice one as well. The 81321. And then we've also got just a ton of ICT trading concepts from Connor. He's got a lot of these videos that not many folks have seen. You guys ought to check them out if, in fact, you haven't seen them. And these strategies all give you a way to trade. They get you involved into the market with a sense of structure. And without any structure at all, you're going to have a real big tough time trading profitably. There's no two ways about it. So right here, as we're looking at something like this silver market, the first thing I want to do is number one, I want to identify market state. And number two, I want to identify one of these strategies that may be able to help me here. Now, any market you look at, you can trade any strategy on. The problem is that some of these strategies are going to perform much better on other markets than some markets than others. So when we go back to say something like silver, once we identify our market state, we're going to say, okay, what kind of trading strategy do I want? Do I want to be a trend trader? Do I want to trade as this market flattened out? Do I want to sort of trade a flat type of a style? And that's going to give us an idea of how we can execute with a little bit of what I would say proficiency. It's very important that you're an astute trader, and you don't just get in trying to trade trends in rotation or rotation with trends. Always remember that market state's the number one thing we got to look at today. I got chopped up trying to trade the E-mini S&P 500 on a rotational strategy. Been very strong in rotation, really going back to August, and today we got hit. And that's just sort of the part of the deal. If you're going to trade, sometimes you get it right, sometimes you get it wrong. The strategies are designed to make sure that your losses aren't catastrophic. Full disclosure, my loss was a little bit too big today. I didn't like it at all, but we did have a real nice trade in WTI crude oil that sort of came across the board right around that sort of mid-morning sell-off. We didn't quite get as deep as we wanted before we rallied, but we'll talk crude oil a bit later on today at the Asia Pacific preview. I'll break down the numbers for you, and we'll go over that market in detail. All right, but this stream right here is all about the pendulum. So as you're trading up to par, if not, go ahead and check out Switch Markets. They can get you up and running with any market you want to trade. Right here, strategies inside of our trading academy, inside of our trading room. We do have a strategies portal. You just go through here. There's 6 of them out there for you. I believe actually there's seven of them out there for you. Go ahead and check them out. We've got the Piranha up there. We've got the Pendulum. We've got the Trend Rider. We've got the Japanese Noodle and the Bollinger W. I sort of specialize in the Pendulum and the Bollinger W. Connor does the Trend Rider, and we've got both of us can do the Piranha. The Japanese Noodle I'm not well versed on though, so I'd have to do a little bit of homework for you there. But this strategy right here, this is the Pendulum. So you'd go ahead and click on the Pendulum video. It's going to bring it up. It's going to be about 6 minutes long. It's very short. It's very sweet. It's a very easy strategy to learn. It's not hard at all. The key to making something like the Pendulum work for you is understanding when to use it and sticking to your stop losses. Don't let one of these markets break out against you and really destroy your account. That's what I want to stress to everybody in here. Believe me, I know from experience, when your stop loss gets hit, Your first loss is your best loss. I don't care if the market comes back in your favor 9 times out of 10. The one time it doesn't, it's going to gut your account. That's why when we set the stop loss up from this pendulum strategy, stick to it. Stick to it. Believe me, it'll pay you off in the long run. So what we want to do here is understand where everything is. Right underneath the video there's a tab called Learning Resources, and you're going to get in there and just check out all of our PDFs. We've got a strategy overview. We've got a trading guide. We've got some trade examples, and we've also got a link to the actual book itself, 17 Proven Currency Strategies by Mario Singh. Now, this is a Forex strategy. However, you can apply it to whatever market you want. I just say, listen, do a little back testing. Stick to your stop losses. You need to be able to stick to your stop losses. If you can't do that, you're going to lose no matter what strategy you're using. Very, very important that we understand that. That's really a key element of trading any strategy profitably. And my apologies once again. There's noise in the background, so I do get a bit distracted from time to time. In any case, trading guide and strategy rules. Very simple strategy, guys. We're going to identify support. We're going to identify resistance. And then we're going to calculate our trading range and base our trading decisions on the width of that range. Now, when I'm looking at something like the pendulum, it's very simple. Very, very simple to do support and resistance. Let's get right out to price action. We're going to start off. We're going to go over 3 markets today, and I'm going to line up 3 trades for you. Let me see Dibble Shane late on the parade. Oh, no worries. No worries. Cooking wife, sorry. No, yeah, it's tea time. That's a good excuse as any. Remember, we're on demand. There is no really being late. The only person that can't be late's me. So that's what I would definitely remember there. The pendulum is an interesting strategy because all we have to do is identify resistance and identify support. So when I look at this silver market, we've got a great big move, really some pretty good rotational moves. There's your big break, and we've gone absolutely sideways there. So there's a couple of different areas that I would look at here. Remember, a support zone is a spike low. A resistance zone is a spike high. Now, we could call these swing lows or swing highs. The key is going to be picking out swing lows and swing highs that are relevant. For me, and the other thing you got to remember is on this Mario Singh's pendulum, you got to start your trading day sometime. Now, I really recommend the 4-hour chart, especially on Forex pairs that don't have that huge elasticity. You're not going to be able to use a 4-hour chart probably on your WTI crudes or your maybe a trending market, a trending equities market. Those are probably better, I would say more suited towards that 30-minute chart during the U.S. session. But we're going to start with a 4-hour chart right here on the silver. Now, if I'm looking to buy in or identify a support level, we've got really a plethora right here. We have a number of spike lows, swing lows, and swing highs. You have a swing low here. You have a swing high here. You have a swing low here. I like that swing low. You say, Shane, can you get away with doing that? I'd say, yeah, you can. You've got to just find these areas that give you a good, solid support zone. That's pretty good. That would be, if you're an order block trader, that would be your demand zone. That would be your order block on your 4-hour. You can see we come right down into these old historical numbers that were posted back in the 18th of September. Take a look at what we got there, sort of a test. So I'm looking very closely at that. I think that's probably going to give us our best opportunity to trade. Now, remember, there is a way that you can build yourself your own Fibonacci tool. I have a pendulum template that sort of gives me everything that I need to trade the pendulum, and it's very simple to do. You just click, like if you're on TradingView, click your Fibonacci retracement tool. It works on MT5 as well. Just go right there and go to settings. That's all you got to do is you're going to go right there to settings, and it's going to give you an opportunity potentially to get in there and maybe identify or build your own template. I've already done that, and I've done that with our 10% lines and our 50% lines. I want to really start off by stressing that's a real easy way to do that, and it's as simple as just going right here to your style and trading view and just picking the ones that you want. That's it. 0, 10, 50, 90, and 1. That's all we're doing here, and what we're going to do with that is we're going to identify trading ranges. Okay, now let's go over the strategy itself. This is from the PDF. Let me see. Unknown user. Hi, Phil from Germany here. Trading since I'm 18, 32 now, profitable since 3 months on a daily basis whenever I trade, every second or third day. Well, there you go. There you go. Everybody sort of designs what they want to do in the market. If you're a high winning percentage trader, that's fantastic. It depends on, do you make a lot of money? Don't you make a lot of money? That really depends on sticking to your strategy and just really being good at it. What I do, I like a real high winning percentage, and I don't like to lose much when I lose. Unfortunately, sometimes it does get away from you. That's just the way that it is, but you really try to learn from those and cut those losses off as fast as you possibly can. But it's hard. There's no two ways about it. That's why we're talking strategy. I'm going to give you a finite stop loss with this pendulum and finite profit targets, so there is no guesswork involved with this. You have a stop loss. You have a profit target, and you just stick to it. The key to this strategy is putting it on the right market at the right time, and I think we've got a pretty good one right here. In any case, the trade execution is going to be a buy. We're going to look to buy on a 10% bounce from support. We're going to design our trades with a 1-to-1 risk versus reward ratio with respect to our entry and our first profit target. Okay, that's going to line up our stop loss, and then our second profit target is going to be at 90%. I really like to focus on the 50% level. I find that to be more my personality, but Mario Singh from the book, from the 17 proven price action strategies, he's looking to get 2 profit targets, one at 50% and one at 90% of our range. You'll know exactly what I mean here in a second. Our sell orders, we're going to sell on a 10% pullback from resistance. Once again, the risk versus reward ratios are the same. The stop loss location is the same. 1-to-1 above our entry. Pretty easy, really. And I'm going to go ahead and show you how to do this right now. So we've got our Fibonacci tool built. The first thing I'm going to do is work from that downside support level. In essence, that's our trade. That's our day. That's our range. And we're working right here from 30.78 down here to 30.12. So that's going to be, what, about a 66 pips, somewhere in there. Depends on how your CFD prices out this silver, or if, in fact, you're trading it on the spot market. Futures are different than this as well. But, some take the pips out a little bit further. We're just going to focus on those first 2 decimal points for this type of trade. The reason why is I want to be able to set it up here and not be doing a long math for the next hour and a half. So in any case, something like this, very simple. Our entry point is going to be a 10% bounce from support. That's our buy. Or it's going to be a 10% pullback from resistance. That's our sell. So we're looking to get in on price action back towards our 50% and our 90%. And we're looking to sell back towards our 50% and our 90%. It's easy. It's a piece of cake. So let's go ahead and build this trade from scratch. Once again, it really helps if you use that Fibonacci tool. Just build it out. Put your settings to 10% and 90% and 50%, and you've got a nice pendulum tool. In any case, right here, what are we looking to do? Well, I'm looking for a test down here of 30.11 and a bounce up to 30.18, and then I'm going to want to buy. So where's my stop loss going to be? If my profit target right there is 50%, my stop loss is going to have to be positioned to ensure that we don't get caught up in a trend. All right, if in fact this thing breaks and runs and we get that big dirty trend, I want to make sure that I stay out of it, and that's what this strategy's for. It's supposed to keep you out of those trending markets and build your trades towards a flat type of a market. So right here in this case, our stop loss is going to be 30.18 minus 30.45, and what is that? It's about 27. Okay, 27 is going to take us down to 29. What is it going to be? 29.89, and that's going to be our stop loss. I believe that's correct. Somewhere down in here. Right in that vicinity. And once again, make sure these are exact. That just is a little bit of effort on your part, doing with a little bit of calculator work and just figuring out the difference between this 50 and 90, and then you'll have a chance here to set your stop loss. Now, once our stop loss is set, remember, we're looking for a test of this. Now, it's not going to be an exact test. It's going to be a proximity test. I would try to get as close as I could, hitting on that support zone and then bouncing up. But if we go a little bit past it, that's okay. And if we fall a little bit short of it, that's okay. In this case, I would be looking for a test of at least 30.10. I'd be looking for 30.10 before we get our bounce. And then down here, I would probably be looking at a maximum of maybe 30.07, somewhere down in there. And I think that's going to give you a pretty good chance to succeed. I just don't want to shade too much on the top, but I don't really mind if price penetrates our level and then bounces up. I don't mind that at all. That might be pretty good. But what I don't want to do is have price break way down here and then try to buy it on a rebound, because odds are we're going to get swept up in that trend. So be very careful with that. As far as, what we do from here, it's relatively simple. Once we get our buy order in, all right, here's the thing. You have to wait until you get that test, and then you're going to put that limit order in, or that stop limit order, or you're going to have to put a market order in when price hits you. I would just use a stop market or a stop limit order. I wouldn't worry too much about it, but you'll be above price action then. Then it's easy. First take profits right there at 30.45. Second take profits up here. If you want to just work with a 50% profit target here, you certainly could. You certainly could, and you could definitely get in there and look to take that 1-to-1 risk versus reward. So guys, the pendulum's very simple. Once again, the biggest challenge here is getting in on a market that's flat, and as you can see from our 4-hour chart, we're pretty flat. Now, if I had my pick of this silver market, would I want to buy or sell? Using the pendulum, I would much rather sell Why? Because we've got a nice big move, a pullback. We failed up here. These order blocks right here really show us that the sellers are getting involved right around that 30.75 level, somewhere in there. So I would be waiting for a test right there of 30.78 and then a pullback to 30.71. And once again, we're right around 27, 26, whatever you want to call it. We're going to go right 26 right on top of this. 30.71 is going to be what, 97. I like that trade a lot better. Something like that. Remember, selling, working back towards that 50%. I like that type of trading. I would love to do this because it's sort of with our broader trend. And, if you wanted some confirmation, you could also throw some Fibonacci's, and that's really where our 30% level is on that 4 hour. So I'm watching this one relatively close. The number one rule to remember about the pendulum. We got 2 more markets that we're going to go over here, but the number one rule about the pendulum is this. When your stop loss gets hit, get out, because you don't want to get caught in a trending market. You can lose a fortune. You can lose an absolute fortune. Remember, there are no rules how high or low a market can go. There are no rules. You may have the best strategy in the world. You may have the best market read in the world, but there are no rules. When that volume starts coming into the market and you see the price start turning over and over and over again, you're going to be in big trouble if you don't get out. That's the flat strategy. If we do break, get out. Get out. Get out. I mean, I'm yelling fire in a crowded theater. If you get hit, get out. That'll save your bacon. Some of the best trades I've ever made are ones that I've cut out, not ones that I've taken. All right, this is interesting as well. This one's coming into play right now. This is a daily chart on your USD CHF. Now, the reason why I would pull a daily on something like this would be more of a swing trade. But take a look at what your range is going to be. Your support level is right in here. You could do this support level. You could do this support level, whichever. But what I'm looking at is really my top side resistance zone. This is a daily flat market. Spike high right up there. You sort of have a swing low right here. But look at your daily ranges. They're very, very tight. Matthew, good to see you, Matthew. You're very, very tight there. So if, in fact, you get into a rotation for like 48 hours, yeah, maybe the market breaks, maybe it doesn't break. But when you get into some of these currency pairs, very rarely does the market just break and run against you. Now, we do have a market driver coming up facing the U.S. dollar. That's why I would be a little tentative towards trading a pendulum on the majors today. But you got your stop losses, and it may be just exactly what you need going in to that FOMC minutes release. So in order to build this trade, very straightforward. Spike high right there. What's that spike low? And by spike, I mean swing. All right, so right there's your swing high. There's your swing low. What do you have down there? 85.29. What do you have up there? 86.06. That's not a bad range for the Swissy. That's not a bad range. So we're going to have a chance here to sell 85.99s, which I love, right beneath 86. And then you've got 67. So you got about a 30-pip chance there. So if we're on the hook for, say, 32 pips, something like that, 32-pip range, what's our stop loss going to be up above this range? Stop loss is going to be right up there at what, 31, 85.31. I like that, or excuse me, 86.31. We clicked over 86. I like that trade location. I think that's a fantastic area. You're essentially what you're doing is you're waiting for a test of this 86.06 and then a pullback. First profit target's at 85.67. Second one's at 85.36. Real reasonable profit target here for a daily chart. I like that a lot. Now, on the other side of this trade, what are you going to have? The same thing, just inverted. You're going to wait for a bounce off of this support zone, this little demand area down there at 85.29, right in that vicinity. Bounce back, buying 36s. 36 and 67 is what? It's 31 again. So you're going to have your stop loss down there at about 85, somewhere right around there, 85.05. It's not a bad trade. Now, you do have the FOMC minutes, so if something does happen that's crazy and you break out, that's just sort of the problem we're going to be in. I'm not sure that the Swissy's going that high. Even if you do break above last week's high, which is right up there at 86.07, you could definitely say that you've got an opportunity there to get that pullback. Remember, we need a nice proximity test here. I would probably consider 86.09, something like that, as being still viable, but I want to hit 86.06. I want to see a test of last week's high before we step up and sell that retracement beneath 86. It could be a pretty good trade. I love my stop loss location right up there above 86.25. Pretty good fundamental 30 to win 30 type of a trade here in this dollar Swissy. Let's see, Matthew, Euro in New York. Let's see, Euro New Zealand dollar starting turning. Should I enter? What do you think? It really, we put out a trade idea on the Kiwi. I really broke down what happened last night with the RBNZ cutting interest rates by a half. Whatever you do right now, just remember that it's going to be dependent on that RBNZ. You were still reacting to that. I don't expect any real huge exotic moves or trends that began. I think that we already knew that they were going to cut, but the forward guidance that came out of the RBNZ is really what we're looking at there. So I'll probably do more of that when we get into the Asia Pacific preview this evening at 5 o'clock my time, about 5 hours from now. Let me see. I've got another question. Yeah, we got one more market left that I'm going to put this pendulum on, and then we're going to go ahead and move on, maybe talk a little FOMC minutes. Also, I have another question related to the trade rider regarding the rules. We must enter. Yeah, I'm not a trade rider expert. You're going to have to wait. Ask Connor about the trend rider. Ask Connor about the trend rider. He's qualified. He does those live streams all the time. Just remember, any strategy that you have where you need confirmation, you've got to wait for the confirmation. So be sure, Matthew, to direct that question to Connor. He'll be sure he's more qualified to give you a really robust answer on the trend rider. He's been handling that strategy really since we launched it. So something to think about there. All right, guys, one last one on the pendulum here. Another daily chart. This is a currency pair that doesn't move. Euro, Great Britain, pound is notorious for being a rotational market, and that's what you see. And a lot of times in a rotational market, you'll get a sweep of liquidity, and then we'll sort of flatline and trade sideways. So right now we're trading sideways, and that's what I like. But I want a big enough range to where we can make a little bit of money on this trade, if in fact we are successful. Though there's your low right there, there's your spike low, and then there's your spike high. Now, the number one thing that you're going to have to do is you're going to have to pick time frames that you like, and you're also going to have to be able to identify your support and resistance levels if, in fact, you're going to be able to trade this thing with a little bit of proficiency. Now, for me, it's relatively straightforward. I like bigger ranges. I have no problem taking these as swing trades because the ranges aren't really that big. I just adjust my leverage down, and I'm going to have plenty of capital to trade this thing over the long run. So what do we have right here? Euro, Great Britain, pound. We've got a swing low right there that came across the board in the beginning of October, about a week ago. And then your high right there, 84.34, something like that. Interesting, really interesting right there. So 84.34 to 83.10. We're right around 124 is our range. That's not bad. That's going to give us a shot at about, 50 ticks, something like that. Right there, our entry is going to be 84.21 from the top, 83.72. So we're looking at about 49 pips. So something like that, 49 pips. We're going to add that to 84.21, and you're going to be up there at 70, something like that, or 80. 21 plus 49 is going to be 80. So you're going to be right up here, somewhere right in this zone. And remember, get out your calculator and work these out exactly. I'm doing these on the fly. It can be a bit of a challenge to do math on the fly, that's for sure. So what we're looking for here is a test of this and then a pullback, and then we're going to sell to play this back towards our 50% level and our 90%. Now right here, if you do take a look at 83.10, 83.22, we're looking for a bounce off 83.10 and then a buy from 83.22. I like this range a lot, 83.22 up to 83.72. It's about a 50-tick range, and you're going to be down here at about 82. About 82.72 is going to be your stop-out point, something like that. Relatively straightforward, guys. Just remember your rules. All you're looking for is a test of your resistance and your support. Then you're going to look at buying, playing back to the middle off of support, and then selling, playing back to the middle. The biggest thing you got to remember is the market has to test this zone and then pull back. If it just breaks clean, you're not in. That's the idea behind this pendulum strategy, keeping you out of trouble. Now, remember, 4-hour charts are great for the Forex. I like this daily chart because it's going to give me an opportunity to play off of October's low and also off of October's high. That's a pretty good. I like my odds from really buying and selling those extremes. And then lastly, I like a range that has a little bit of guts to it. That means we can make some money if we're successful here. And that's exactly what I want to get accomplished with any strategy I put on the board. I want to make sure that my risk is justified. That's it, and that's all. Something to think about there. So that's what we're looking at here. Just remember, you need a proximity test of these. You can give it a few pips either way on a range this big. If you test 31 and then come back, I'll give you that. I wouldn't, if we break up above 40, 84.40, I probably wouldn't be in. And if we break down probably beneath 83, 83.05 or so, I probably would pull my orders as well. We want to get on that flat price action. One of the questions that I would be asked: why did you ignore that swing high when you were building your Fibonacci's there, or your pendulum trade? And my answer is real simple. if I really get away from using that swing high right there, you can see that we sort of get into a real mess with our market dynamics. We're trading the inside of this. I want price to get a little bit extended towards our extreme. And for me, these things have to be obvious. Your swing lows, your support zone, and your swing high, your resistance zones, they need to be obvious. They need to be obvious. Make sure they're obvious, and you'll be just fine trading this strategy. All right, everybody, that's it for this strategy session. We got FOMC minutes coming out in about 30 minutes. Be careful with the release. You're going to want to really be careful with this one because, remember, there's going to be a little bit of conflict in that meeting room. We had some folks, FOMC committee members, that only wanted to cut by about a quarter, and there's others that wanted to cut by a half. So we're going to see more of that dialogue. I'm going to go through and sort of read the minutes and prepare a live stream later today. We're going to hit the high points at that Asia-Pacific preview. Then we're going to go over probably the dollar yen on that U.S. Open. And then, Matthew, I'll go over those Kiwi pairs and see exactly how the trades that we outlined ahead of those ahead of that RBNZ came out. It was a volatile engagement. There was a lot of movement there out of the RBNZ. That interest rate decision really shook the markets up. Really shook them up. So you definitely, if you made some money trading the Kiwi last night, well done. If you didn't, we'll see if we can get you on the right foot. All right, thanks, Dibble. I sure appreciate it. Every now and then we just do a strict strategy stream. Tonight, though, I'll be back, and we'll go over some Fibonacci's, and we'll talk about a few market reads. WTI crude oil on the front burner, and I also want to see what happens to this U.S. dollar after the FOMC minutes. All right, everybody, that's the Pendulum. Trade the action well, and we'll talk soon. See you.